welcome to the Trading Market Technicals morning call video for Wednesday, January 22nd. Well, a little bit of a mixed bag yesterday, despite the pre-market advance in the E-mini S&P due to the fact of China pumping additional liquidity into their markets, devaluing their yen. And we did have a pretty decent-sized gap up in the morning, and automatically, within about 15 minutes, the markets actually started to sell off. Sellers came around and started selling into that strength. Dow Jones was down about 100 points at one point, ended up closing down 44. Although the NASDAQ actually closed pretty well, up 28, S&P up 5, and the Russell up 7. So we do have some strength within the indexes that we follow. Now, I mentioned yesterday, I said I was looking for some strength and then having the markets reverse. The problem with that was that the markets gapped up and immediately got sold into very, very early. And what I was looking for was more of renounced strength pretty much most of the day, sideways consolidation, and then sell-off at the end of the day. If you get that sell-off at the end of the day, usually will close pretty dismal, pretty weak, and follow through for tomorrow, meaning for today's session. But since we had gotten sold off pretty quick in the early morning session yesterday, the markets had plenty of time to obviously recoup its losses and pretty much close with solid gains in all of the indices except the Dow Jones. So interesting developments though, but I do see sellers coming around at these levels. Every time the markets jump up and they start to rally, sellers come around and they sell right into it. So to me, that is definitely a warning sign. Now, we're not looking to pick tops, right? We're always looking for following the trend and buying pullbacks in an uptrend, obviously selling rallies and downtrends. And this is clearly still an uptrend. And the reason why I continue to say that is because although we have red flags upon us in our indicators, price is what pays, price is king, bottom line. And until we see the market really start breaking down some pivotal lows with volume, the markets will continue to hover here. Now, it's been a very, very quiet 5-6 trading days. But we are at these extensions, and we need to be aware of that because we could sell off at any given moment. However, when the markets consolidate at the upper end of these trading ranges, I think the path of least resistance is at least one more push to the upside, get that all-time high again, and then markets start to sell off. Now, again, it's just my opinion, and it means absolutely nothing in the markets, but just from what I'm seeing and what I've seen in past history, I think that the markets are looking to do something. Now, we could easily sell off from here because we are so extended and we are at these extensions in the markets. So just a little word of caution here. I wouldn't go too overly long the market unless you're doing option spreads, which is obviously much more friendlier, actually trying to be long or short the market or stocks for that matter. There is definitely rotation of money coming in and out of certain sectors and going into another. So that makes the market a stock picker's market. And what we like to look for is certain sectors that are actually gaining some momentum to the upside where money starts to flow. All right, so let's just quickly take a look at some of the indicators here. Not going to bore you with the details, but as you can see, this is clearly on a sell signal. This is a very reliable indicator. The bullish percent actually works off a point and figure chart. Very, very reliable. So to me, I'm looking at this as a word of caution here, as the markets right now in the pre-market session really unchanged, down about 75 cents in the E-mini S&P. So very quiet overnight in Asia, very quiet to the start of the European session. So to me, really anything could happen between now and the opening at 9:30. All right, so we have the bullish percent giving us a little bit of a low. Now, McClellan oscillator, a little something different, right? Very good, reliable indicator. Hasn't really shown us much of anything here. We've been bouncing around between, negative 60 plus 60, which is really neutral territory. A break above these areas and these Bollinger Bands. That's when that to me tells me that we're looking for a pullback in the markets, but we haven't had that in quite some time here. Actually, since October and then in September, and then we had some down here in August. So, but this here you could see kind of like it's a flag, bull flag, as you can see this here. And once we break back above it, I think we're just going to pop up higher. And then once we get that pop into these extremes, that's when I think the markets will get sold. Now, remember, we got plenty of room to run either way, down and or up. So doesn't tell you what direction, but again, path of least resistance is to the upside. So a word of caution if you are long, because the markets actually could go either way at the moment. And to me, I just continue to see a lot of selling going on every time the markets take a little bit of a pop. They get sold into. So I definitely could say that the big money is selling into selling into strength here. Okay, new lows. This is another thing I'll be looking for watching this break here. We've been in this range since September. New lows starting to tick up 22 from yesterday. Let's see if we get this breakout. If we get this breakout, back test, and then continue to go higher, then I think the markets are really forming some sort of a top. Now, nobody knows when the top's in place, but at least you can get a good idea of what to look for. Stocks above the 50-day moving average, kind of see this right in this area here, into the apex of the symmetrical triangle. Perfect spot for a sell-off. Again, just a word of caution. VIX starting to come alive a little bit. As you can see, we're still at the lower end of the range from all of 2013. Still below the 20. But keep an eye on this. We're flagging right now, so I would like to see a flush in the VIX, a pop in equities, and then, of course, breaking down of this Bollinger Band and then rallying back up. That would put a buy signal into the VIX, a sell signal into U.S. equity. So we'll just keep an eye on that as well. Let's take a look at the dollar, because the dollar is going to be important here for commodities as well. Now, as you know, seasonal strength comes into play January and February of gold and silver. I still like the gold and silver play. It did have a little bit of a sell-off yesterday, but you have to stick to your plan. If you're nibbling into a long position, small, then you're welcoming these pullbacks. But if you obviously all in already, then you are either getting hurt or you're going to get stopped out. Now, I like the gold trade here, as you can see. I like silver better only because, as you can see, it's a little bit more. We've broken back out above it. Now we're holding a 50. Now, actually, we reversed the previous day's candle. But if you look at the silver chart, silver is a little more volatile, but as you can see, it has a better base here. And can't break above this base. Now we broke back down. We broke up and then we broke back down again. Still fine. Below 1950, you got to say, well, the silver trade is not going to work at the moment. So 1950 would be your spot below. But I still like the silver trade coming to seasonal strength. And remember, silver and gold can literally just break right out in a matter of minutes. And we are a bit extended to the downside, so it wouldn't surprise me to have that retracement rally that I'm looking for. And palladium is actually telling me the bigger clue here. As you can see, palladium, we're just hovering right above that 20, and I do like palladium here, just basing. If palladium starts to break out to the upside, then I think you're going to have that retracement rally begin in the metals. But if palladium continues to hover down at the lows in his little base pattern here, then I really don't think the silver and gold trade is going to work out until if we have some weakness in equities and the dollar starts to sell off, then obviously that silver and gold trade will play up. So right now, there's nothing to worry about in gold and silver. I still like it. As far as crude oil, got a bunch of emails on as far as crude. We did bounce off the 20-day lows. Again, this to me is just a retracement rally in the bigger picture of a downtrend. Now, I do like to buy crude. I never like shorting crude oil. A lot of geopolitical risk out there in the overnight session, so I'm a better buyer of crude than I am being a short seller. I like to see a higher low from here, base like this base area, and then take out the base. And then for a trade, we will look for a trade until crude oil really starts to prove itself that it wants to go higher. Remember now, crude seasonality usually is pretty strong between now and just before the driving season coming around April. All right, so something to look for. So I'm still watching crude oil. All right, so let's go right into our indices. As you can see, E-mini S&P, we are at monthly extensions from the crash of 2009. So we're just hovering here. Here's that little piece here. All month we haven't moved. So we're still within an inside day from the previous month. So we're still stuck in this area. But remember, we are at monthly extensions in the Fibonacci here from the lows to the highs. So that is something that you really want to take into consideration. Daily chart, E-mini S&P. Now you see we're down about 75 cents. We are now hovering Nothing wrong with this chart at all. We have the 50, the 20, we have the 50, we have the 200. We have three uptrend lines that were the trend lines that have not been broken. So nothing wrong with this chart. Now we are basing at the upper end of the range. As you can see, all of January we have gone nowhere other than a 1 day down and a 2 day up. Everything else has been just literally just status quo. To me, energy is building, guys. So I think that we're going to break up. And if we do break out, I'm looking for a breakout and then fail. And we'll look for that test will be that 1857, the 1272 extension from the high to low. This is an hourly chart. So we are hovering now this 1837. Pretty big area here. 1820 again will be the next area of support. If we break 1820 on a closing basis and we start to separate from that, not just 1 day or 2 days down, but if we break below that 1820 and we hold and we start to separate away, price separates away from this 1820 area, then I think you have a deeper downside correction, at least to that 797 area here, and then we would reevaluate the move lower. Okay, let's go right into spiders. As you can see here, really quiet, guys. I mean, really quiet. This is almost too quiet. But I am anticipating some nice volatility coming into the marketplace here. And the diamonds, as you can see, took it on the chin here. Weakest of the 5 indices that we follow. Here is the transportation sector. Now, the transport's holding up very, very well. Above this uptrend line from the November 2012 low. So still doing very well. A little bit lack of volume that I like to see. But again, a pause day, outside day from the previous day. So again, not doing bad at all. And that's another evidence to me that we are going to probably move one more time to the upside. And you can see here, Russell, IWM, ETF, good gauge of risk. As you can see here, Bollinger Bands pinching. Another good spot tells me that we're probably going to push higher before we push lower. And again, that is just my opinion, nothing to trade off of until we see some further evidence that price is indeed moving higher. Remember, we could easily just sell off here and start lower because of the fact is we've been down for we've been up for so long that once somebody gets the notion of taking profits and you have some big funds there liquidating, then all bets are off to the upside. Qs, as you can see, did very well, very well. We had some earnings announcement, did really well. Off of some of the tech stocks that reported. Here's the GLD. As you can see, we have some overhead resistance holding right now, capping that area. Now, we could literally just really flush, guys, and that's what commodities, how their price action does. Their price action is if it wants to go up, market starts to break up higher, and then we can literally see a big move to the upside. But if we start taking out some key pivotal lows, gold is true trend. So if that means that if the market is lower, which it is indeed lower, we could just flush to the downside. So that's the only issue with starting to pick gold to the long side, is that you could wake up one day and the markets be down pretty big. So, just a word of caution here. Here's the XLE. Now, we had some good earnings from Schlumberger, SLB. Halliburton was doing well. It reported, I think, didn't do too well, but Baker Hughes, BHI. So the oil and services, OYH, which is the ETF. Here's the XLE, which has a bunch of them in here, holding up quite well. So something to keep an eye on. Here's the USO. Again, I'd like to see a little higher low, a pullback, maybe back to the 33.30 base a little bit, and then start to break out again. So right now, no trade in the USO, which is the crude oil ETF. XHB, really nothing going on here. Still okay. I still like this. Now, you can see it's in a short-term downtrend. I wouldn't even say it's a bull flag anymore. It's just too extended for that. But holding a 50, literally just back testing this symmetrical triangle's upper trend line. So I'm fine with that. I still like the XHB trade. As you can see, if you look at the symmetry here, you can see this nice pattern of just like these flag patterns here. So this to me is no problem at all. I do like the trade higher, and I do think that all it needs is one more spark and all of the other builders will follow suit. Same thing with Lennar, as you can see. Lennar here, nice big pattern. We have these retracements, and then boom, higher. So to me, I still like the builders. Nothing wrong with them as well. And if remember, if you're starting a position, start something small where you could leg into the trade. Okay, you don't want to just all in one shot, and then now you're looking to get stopped out. You have a little bit more longevity here in the trade. So definitely follow your risk management and trade management plan. And if you don't have one, I'd suggest you definitely get one. Very important. Here's the PHM. I like the PHM here better than Lennar, and I also like the KBH. Hasn't gone anywhere, and I still like this on a break higher of this. Once this breaks out, guys, you're going to have plenty of room. You can see here, look at the volume profiles. All thin zones up in here once we break out this area here of 1840, call it. This is going to be a nice big breakout, and we'll have plenty of room to run to the upside here. Okay, and then lastly we have the banks. Now banks took it on the chin. Here's Citibank here, really actually popped higher, had a positive mention on some of the firms, some of the research firms saying Citibank should be bought on weakness, and I absolutely agree. I think here anywhere above the 50, if it breaks below the 50, I wouldn't be looking to pick a bottom. Wait till it base again until it gets back up again, but I do think that Citibank is going to be another good buy in the coming weeks as well. Here's JP Morgan holding up a little bit better than Citibank. Obviously, well, Citibank reported. And then we have Goldman Sachs. Needs a little bit more work, but here we are. See how quickly we get back to the 50, and let's see how this acts above the 50-day moving average. Because if it starts to act okay, then for a trade would be a good area to nibble in long. And then we have Apple, as you can see, Apple holding well. But again, I think Apple could use one more flush low before we start looking to buy into it. Okay? All right, guys. Have a great day today. Big storm out in the Northeast. That does affect price action, believe it or not. A lot of traders and money managers really just don't bother going into work. They either work from home or they just take the day off. So we have about good 16 inches here out in the East Coast. And so today's might be a little bit of a light day, which will cause a little bit of erratic volatility. So just keep that in mind. All right, guys, have a great day. We'll speak to you tomorrow. Take care.